What's going on, everybody? Welcome to Risky Ryan Trades. Well, today was another doozy for the stock market and investors. This morning when I woke up at 6 a.m., a bunch of my names were actually they were green at the moment. They seemed to be recovering, and my very first thought was, I don't believe you. I don't know if you could hear that. Let's try this again.
I don't believe you.
Right. I knew that we were due for some sort of relief, and I was almost certain it was going to be a bull trap. And so I actually trimmed some of my positions on the relief, and thank God that I did. And this morning before market open, I raised my stop losses, and I'm sitting at a hefty, over 50% cash position right now. And normally I am very, very bullish. I'm like a tech investor. I try to have a portfolio that outperforms the NASDAQ and kind of goes in line with the NASDAQ. I like that risk. I like the long-term outperformance that you get from it. However, I'm not a big fan of holding on during a massive drawdown. And my thought process is, if you can get out of the way of a speeding train and wait for a couple cars to pass before you jump back in on the train or whatever, you do that a couple times a year, and you could cut, it would make a significant difference, in your retirement 30 years from now. That's kind of how I approach it. And so let's take a look. I want to take a look at the S&P 500 and tell you why I think we are just getting started with this. But before I do, quick disclaimer, this is for entertainment purposes only, not to be misunderstood as financial advice. Trading is risky. Use wise habits. And I hope you learned something, though, from this video. If you get value out of the video, why don't you go ahead and smash that like button. Tell me how much, what was your biggest loser over the last week? What stock did you take the biggest hit on? I'd love to see that in the comments. Mine was, let me think, probably Eli Lilly, or no, Costco. It's definitely Costco. We went from 925 down to like 830 something today. So that was bad. That hurt a lot. But Costco's had an amazing run this year. So that's like one of the positions I've had so long. I just don't sell it. I just hold it and let it be. But yeah, leave a comment below for me, and if you have liked a few of my videos, hit the subscribe. All of these things help me build my channel. And that's what I'm trying to do. It's a new channel. Anyways, without further ado, let's look at the S&P 500. So I've got the daily up, and as you can see, yesterday we closed below the Tenkan-sen. Today we are, headed towards the Kijun-sen. We are sitting on, we're basically battling over 550, which is all well and good, but in my opinion, in situations like this, it rarely ever works out nice and clean like that, where it just bounces off the 550 and then we get back to 552 and that'll just hold. And when the S hits the fan like it has, I'm looking for consolidation zones like this area right here. So I want to show you why I think that this is just the beginning, and to do that, I'm going to show you these Heikin-Ashi candles. Now, Heikin-Ashi candles are not like normal candlesticks, but you can see when it's trending up, it's green, and when it's trending down, it's red. And back in May, we had a pretty rough one, right? We had a pretty rough sell-off. We got into the cloud, and then this GAN level ended up holding, and we pulled out. Lovely. Since then, we have had, one decent road bump, and then this probably should have been a bigger road bump than it was, and we just pushed right through it. And it's my belief that we are headed back to test these levels before we can continue. And it could get even worse than that. So I don't think we have marked the lowest point of this sell-off. I'd be shocked. which is why I have such a strong cash position at the moment, especially as we go through earnings. I just want to see if there's any like just absolute bargain bin basement dwelling deals, you know, to scoop up. I don't at the moment use Heikinashis to time my entries. Although I will do that when I'm swing trading, but for my positions, I'm happy enough to like miss out on like, you know, 1, 2, 5% drawdown. You know, like if I'm out of the way of that, it comes down 5 or 6%, and I'm okay buying back in there, knowing that like 6 months from now we'll recover back up, and I will have missed this part of the drawdown and gotten that much more. That stuff adds up. The trick of it is like, what if it just reverses tomorrow? Obviously, I don't see that coming. I don't see that happening, especially since you can see here how these Heikinashi candles work. If you're familiar with them, let's just do a little review. So right here we had a down, and then we blasted back up, right? This was a big down, and we didn't really get through it until later, and it was as we approached the Gann level. This is a little bit atypical. You know, it does happen where there are, you know, a couple small candles and then we go back up, but, you know, here you can see we had quite a big drawdown, and these candles in particular are pretty big. So what I'm thinking is, you know, like look at these two candles right here back in April. We had a 1, we had a 2, and then we just kept making lower lows. And we have gotten pretty dang extended, wouldn't you say? And there's some other things that I'm looking at as well, other than the Heikinashis, to inform that I want to show you. So this is let me just go to the daily, and we're gonna bring it all the way to the October recovery. So you can see here all the way back in October on the RSI right here, we got up and we got cooked, and we fucking ripped. We ripped. We pulled down. It wasn't even that much. We kept getting overbought, and then finally something gave in, and the RSI made it all the way back down to the 30. Then we recovered. Boom. Boom, boom. And we got really extended. You could see here, whenever, you know, it's okay if we get an RSI like 73, you know, that's sustainable. But whenever we get to an RSI level of 77, your days are numbered. There's going to be a pullback in the near future. And in general, I bet you know, had you sold at that moment and waited to buy back like 1% lower or 2, you probably would have caught an opportunity. Now, one other thing I want to show you is we have this big drawdown right here. Look at this MACD. Look at the histogram. Look how deep it goes. We haven't had anything like that for a while now. We had a big one. See the big green? A smaller one, a little bit smaller one. Now I think we are due for a bigger downswing. I think that what I'm expecting is something like we saw in May. I'm expecting something like we saw in May. And take a look at this. This first red candle right here on the MACD histogram is already lower than any of these that we experienced during these two consolidation periods. Let's get it bigger. So you can see just in today, it's already gotten down there. Now, at the moment, let's just take a look, because market hasn't closed. It's going to close in 2 minutes. So actually, I'm going to pause it right now and see exactly when it closes and if we were able to hold a moving average. Okay, market just closed. This is the closing candle. Very ugly. We tapped the 550 level, tapped the 50-day moving average. The MACD just crossed over. So we also, if we look at the weekly, this is something to keep in mind too. The way it sits right now, we have a bullish engulfing pattern where a bearish engulfing pattern where we have engulfed the previous week and undone the whole previous week. The last time that happened was right here, and we had a drawdown peak to trough of 6%. Right now we're only at 2.37%. And this candle is not nearly as ugly as this candle. We also had one back here, a bullish engulfing, which resulted in a pretty rough period. Also, on the daily, you can see these little dots. This is called a parabolic SAR indicator. It also helps to identify when trends are breaking down. And we had our first dot today, which means that it doesn't mean that this can't be the low of the entire downtrend, but usually it isn't. And usually that means there's going to be more volatility, more uncertainty, more red days and probably some tears to come. So you can also see here our RSI, we're already down within just a few days, just 1-2 days, we already got down to 55. It took us 6 days last time to get down to 55. So getting there that quickly, I don't like it. I don't like it. I would have much rather seen just like sort of like a, maybe a holding pattern that like we come down and then we slowly trend down and then come back up, like something a little bit more uniform. But what we have right now is a sell-off, is what we're experiencing. It started with the big techs, the small caps ripped, now they're selling off to a degree. I do want to take a look at how these ended up. So you had the Russell down the most. My last video said that this is the most resilient. Well, it got hit the hardest today. And I wouldn't be surprised to see this continue. And in my next video, which might already be out, take a look. I go over all of the, I'm going to go over the NASDAQ, the S&P 500, the Russell 2000, the Dow, as well as the Magnificent Seven and a few other names. And if you have a ticker symbol you'd like me to analyze, leave it in the comments below. Let's keep looking at this. I want to show you these Heikin-Ashi candles as well. So typically when you have these big bodies and no wicks at the top, that indicates that a downtrend has started. And especially when you get these big guys like this, that's usually the start of a pretty steep pullback. Right here, and then we got back down a little bit further. So, I have my eye on this. I don't always use the Heikin-Ashis, but they are really good. Like if you feel a little shaky, if you're like, man, I can't believe the run that this has been on, and you're wondering when it's going to end, and you're thinking about taking profits, but you don't want to take them out too early, the method that you can use is put stop losses underneath these green candles, and then you'll see wicks start to form or the candles get a little bit smaller, like it does right here, once the trend starts to run out of steam. And as you get up there, you can say, okay, it looks like the trend is going to reverse, and then you get stopped out. And then basically what I do is I try to look for areas of consolidation, and I start DCAing in. And that way, like, I can at least mitigate some of it. I rather personally err on the side of getting in too early on the trend reversal than missing it and buy and hold. If you're investing, I should say, this is for investing. If I'm investing something that I want to own, I don't really want to trade, I still will protect the position by having stop losses when I feel like I can't. If I'm like, I look at it and I go, how the hell did it get that far? Then a lot of people are thinking that. Believe me, Wall Street is thinking of it, and they're looking to take their profits. So I will start tightening up my stop losses, and then when you have these big down days, I'm looking to, pick it up 5% down. It depends on the particular item. Like CrowdStrike moves like 10% this way, 10% that way. So I'm looking to stay out of the way of like a decent swing before hopping back in. But I'm okay, like if it comes down to, if the S&P, for instance, were to come down to this level right here, and I'm going to put $5,000. That's how much I want to have invested into the S&P 500. I might put $1,000 in right there. Wait and see. If the trend starts reversing, I'll put the rest in, and I'll try to see if I can catch the next upswing. Or I put $1,000 in, and then it keeps coming down, and it comes down to here. Well, then I'll put another $1,000 in, and then if it starts to come back up, I'll put $1,000 here. So like I'm trying to DCA myself lower than where I pulled out. That way, 6 months from now, once we're up to the next level, I'm that much more ahead of the game. It's an art, not a science, and like I said, this is not financial advice, entertainment purposes only, but maybe you learned something from this video. I hope that you did. If you use my strategy, I'm not guaranteeing that you're going to outperform. I have been outperforming the S&P 500 up until today. Now I have even gains. However, I think that that's going to be the end of it today, because I think this is coming down further. I think we are headed to this 545 level. The 550 level held today, and 548 is going to be, I think we're going to have like a consolidation there, but I think we are going to get a lower low down here in the 540s, 545, and that's when I'm going to start DCAing a little bit back into my positions. But yeah, I do not think the pain is over. I just don't. I think that there's certain key levels that I have my eye on. I'm predicting this crossover is going to be uglier than this crossover was, and uglier than this crossover was. And we've already softened on the RSI more than we did after this one. And we should have probably right here should have had a pullback, but instead we had I don't know if you want to call it a blow off the top, but we made a leg higher when we should have made a leg lower. And so that's what the market is telling us right now, is that this should have never happened. Right here should have been consolidating down to this area right here. So to retest these levels, which we have done. So I'm not saying it can't turn around from here, but if I'm a betting man, which I am, I'm looking for 545, a break under 550, and potentially a close under the 50-day moving average. Or potentially, a move under and then a close right above. That would be interesting to me. But we'll be keeping a close eye on this. If we get a movement like we got here in April, we went all the way into the cloud and came damn close to the 50-day moving average. Damn close. And it started with us coming under the 50-day moving average. There was a little bounce, and then a tumble. So, here, I probably would have, I just held all the way through it. I don't really feel like doing that again this time. And this right here, and this right here, like big bullish engulfers. And then this, here, let's go to the Heikinashi real quick, or the regular, or these are the regular candles. So, we had a bullish engulfing of a bullish engulfing. It's brutal. So this 550 level to 548 level, if that breaks, we're seeing 545. And there's a trend line that I've drawn that tomorrow we'll hit it at 546, 545. So be prepared. Be prepared. We do have Netflix earnings right now, so I'm going to go take a look at that. But thank you so much for watching. You're probably seeing some videos and the subscribe button show up on the video. It really helps me out a lot. Love all my new subscribers. Once again, comment below. What was your biggest loser this week so far? How much did you lose? I'd love to know. And if there are any ticker symbols you want me to look at, and you want me to look at, you know, the Ichimoku, the Heikinashi, or just, you know, let me know what you want me to look at. I'd be happy to add it to my daily review. But with that said, thanks so much for watching. Ryan out.